All right, let's jump right in. What if I told you there's this hidden, almost secret connection between the massive, ever-growing U.S. national debt and the price of Bitcoin? I know, it might sound like a bit of a stretch, but stick with me. We're about to connect the dots between these two things that seem worlds apart, and honestly, it might just change how you look at both of them. So that really is the big question, isn't it? What on earth does the U.S. government's gigantic credit card bill have to do with a decentralized digital currency like Bitcoin? Well, the answer to this little mystery, it's about more than just market trends. It actually tells us about a huge shift in how we're all starting to think about money itself. So let's start digging for some clues. Our investigation kicks off with our very first clue, and believe me, it's a real jaw-dropper. We're talking about the sheer, staggering size of the U.S. national debt. And this isn't just some random number on a spreadsheet. It's the bedrock of our entire story. Just take a second and let that number really sink in. It's so enormous, it's kind of hard for our brains to even process. To put it into perspective for you, the U.S. debt is now growing by about $1 trillion every 100 days. Yeah, you heard that right. This isn't just some accounting issue, it's a massive force that is actively reshaping the global economy. Now, as you can see from this chart, this debt has been piling up for decades, but look at the acceleration. The jump from 2000 to 2010 was big, for sure, but the growth since then, it's gone completely exponential. It's this incredible speed, this breakneck pace, that's really setting off alarm bells and acting as the main trigger for everything else we're about to talk about. Okay, so you've got this absolute mountain of debt. How does the government even begin to handle that? Well, that leads us right to our second clue, the government's response to all this financial pressure. When the money coming in from taxes just isn't enough to pay all the bills, the government has to find cash somewhere else. And this is where you hear the term money printing thrown around. But, don't picture some giant factory churning out stacks of physical cash. These days, it's almost all digital, and it's a key part of what's called monetary policy. This slide breaks the process down perfectly. First, the government issues bonds, which are basically just IOUs, to borrow money. Then, the central bank, the Fed, comes in and creates new digital dollars literally out of thin air to buy up those bonds. This pumps brand new cash directly into the economy. And just like that, the total money supply gets bigger. It's an incredibly powerful tool, but as you can imagine, it comes with some major consequences. And this brings us straight to the consequence of that action. It's something every single one of us feels, every day, whether we realize what's causing it or not. Yep. The direct result is inflation. I mean, think about it this way. If you suddenly have a whole lot more of something, its value usually goes down, right? Well, the same thing is true for money. As more and more dollars flood the system, the buying power of every single dollar goes down. And that's why it feels like your coffee, your gas, your groceries, everything just keeps getting more expensive. The dilution analogy here is absolutely perfect. Imagine you have a glass of orange juice. If you keep adding water to it, you get more liquid, sure, but the drink itself gets weaker and less tasty. That's exactly what's happening to our money. As the supply expands, each dollar becomes a weaker, less powerful version of what it used to be. So let's just quickly put the pieces together. We've got massive debt, which leads to money creation, which then leads to a weaker dollar. Now, this creates a really big problem for anyone just holding cash. If you know your money is losing value just sitting there, what do? This brings us to the big reveal, the flight to scarcity. People start looking for other places, other assets to protect their wealth. This flight to scarcity pushes investors towards something called a safe haven asset. These are things that have a limited supply, so they can't just be created out of thin air. They tend to hold their value over time. And this is crucial, they aren't controlled by any one government or bank, which means they're safe from the kind of money printing we just talked about. For centuries, gold was the ultimate safe haven. And this, right here, is where Bitcoin enters the picture. The parallels to gold are actually pretty striking. Just like gold, Bitcoin has a finite supply. There will only ever be 21 million coins, period. That's a hard-coded fact you can verify yourself. And just like gold, it's decentralized. No government can just decide to create more of it. Because of this, a lot of people are starting to see Bitcoin as a digital version of gold, a brand new kind of safe haven for the 21st century. And that's exactly how it earned the nickname digital gold. It's designed to serve a very similar purpose, to act as a store of value, as a hedge against inflation. But it does all of this in a way that's built for the internet. It's really just an age-old idea, preserving your wealth, reimagined for our digital world.
So here's the bottom line. As the U.S. debt continues to climb and the money supply keeps expanding, the value of the dollar comes under serious pressure. This pushes smart investors to find refuge in assets that can't be so easily devalued. And for a growing number of people, Bitcoin is becoming that refuge. It's like a digital escape hatch from a traditional financial system that seems to be on increasingly shaky ground.
So we're left with this really powerful question to think about. If the traditional financial system is this massive ship, but it's sailing into some pretty stormy seas, is Bitcoin becoming the lifeboat of choice for people who see those dark clouds gathering on the horizon? The connection between US debt and Bitcoin prices, it's not so mysterious anymore. It's a reflection of a world searching for stability. What you do with that information, well, that's up to you.